What up, YouTube? Let's get. So, this famous topic has been brought up to my attention about flipping for tax season. So this will probably just a part two on the other video that I made previously last year about flipping for tax season. Number one, I would strongly suggest understanding the fundamentals that are going to play out for tax season. Obviously, what's going to play out for tax season? Number one is probably the new president, right? We got Joe Biden coming in from the Democrat administration, and we got a big upcoming blue wave coming in. And what I mean by that is that we got Democrats coming in hard for the Senate and for the House. So, what does that mean? Well, Biden is already talking about doing a third and maybe possibly a fourth stimulus package for the United States economy to revive and to stimulate the economy. So the reason why I'm on fxstreet.com is because I want you guys to understand where I go for fundamentals. And this is a great tool, a great resource website for you guys to look at. If you don't like fxstreet.com, you can go to Forex Factory. Forex Factory is also great as well. You can always look at the latest news and also the upcoming economic calendar. All right. You know, I don't care about forums or threads, but like I said, this is pretty crazy right here. And then also right here, White House, U.S. is examining further options regarding China. Now, if you guys probably wondering about what's going on with China, Trump has not initiated anything to resolve a tariffs and the imports and exports with China. So remember that the trade wars started with Trump and it hasn't finished with Trump. So just another factor what Biden is working on behind the pandemic and the stimulus packages. So now that you guys get a little bit insight of what I'm talking about for fundamentals, let's talk about what happened last year during tax season and what to look forward, what's going on for this upcoming tax season for you guys. So this is just my personal opinion, my personal analysis on this, on full technical and fundamentals, and what I personally see for myself, where the markets are going for tax season for this year. For at the end of this month, right? People get their W-2s, right, at the end of January, right? And then tax season really starts like, right around, the 1st of February and then ends at April 15th. I have a feeling that they're going to extend tax season all the way till summer from what I saw last year anyways. I have a feeling that they're going to do the same thing. And so they'll probably bring a new deadline to July 15th of what they did last year. I wouldn't be surprised on that. Pay attention to the mortgage forbearance programs as well with the real estate industry and how the housing market is going to be affected, starting next month and all the way to the end of tax season. So let's dive into the charts here. If I can get out of this. Let me get out of this thing. Sorry. All right. So let's hop into here, and I'm gonna go into. I just go to weekly, make it this easy. Yeah. Let's go to weekly here. So let's talk about what happened at the beginning of 2020, right, with the U.S. dollar, and then in March, and then I'll highlight April. So the reason why I'm highlighting March and April because those are like the two craziest months to make the most amount of money, and you can see how much volatility, how much volatile there was with the U.S. dollar in March and April. Pretty crazy, right? So they shot it down for March. If you guys don't remember, the reason why I'm talking about the past of 2020 and the tax season of 2020 is so that you guys can get a feel for what's going on, what could possibly happen for the upcoming of the next months, right? The next 3 months of the first quarter, right? So let's talk about this. You can see there wasn't a whole lot going on within January and February, but right when March kicked in, it was when Trump announced the national pandemic for COVID, sparked the U.S. dollar going down, and then they finally brought it back up because they were talking about a stimulus package. All right, so let's talk about this again. US 30. All right, this is 2020. You can see all-time high and then kaboom, shot all the way down. So another major factor that would spark the selling was the pandemic, and investors flocked away and started investing in gold. So let's talk about gold back in this chart here. Gold, right, back in 2020, okay, you can see in March and April, right, it peaked all the way down in 1480, but it shot all the way up, all the way up to 2000 by July. July was the new deadline for tax season. So all in tax season, you can see that gold was up the whole time anyway. But obviously gold was up since, beginning of 2018 anyways, at that 1160, 1180 range. So, but based on, March and April, the reason why I talk about March and April a lot is because you're going to start seeing some major fundamentals that are going to kick in, and you're going to see a lot of unexpected volatility from the central banks, right? And also other unexpected news events that we can only anticipate so much for the markets itself. So I'm talking a lot about Wall Street, the US dollar index, and gold. I'm not talking about any other pair because those pairs either follow the US dollar or they don't, right? Or they go against it. So I'm not going a whole lot. The other pair that I would really go focus on, if you really want to make the most amount of money on the currency side, would be the pound. And the pound took a drastic hit. You can see here back in March and April, but back in March took a major hit. And if you don't remember, the pandemic hit and the UK went on a huge lockdown at that time. So just another, major news to pay attention to, right? You talk about central banks, back to political tensions with parties, UK versus the EU. So it'd be the UK Parliament trying to renegotiate and some more deals for the Brexit negotiations that hasn't been finalized for the European Union. So that is another big factor for the British pound. Those that love to trade the pound, whether it be the pound against the US dollar or euro to the pound, euro against the pound, right? Euro GBP there. So that's my setup for looking at the pound. Those that want to know where they want to get in or not. But I highly recommend pay attention to the fundamentals that are going to affect the wave for this currency. Based on this, of what has happened last year for the pound and up until now, you can see that it's been going up, but you can see that it's been hitting a main resistance price at 136 and 137. So that's on the technical side. But on the fundamental side, always understand that the pound has not been really positive based on the Brexit negotiations with the European Union. Let's go back here. Yeah, I'm not going to talk about Bitcoin. I'm not going to talk about crypto. Obviously, crypto's going down right now. Those that missed out on that opportunity. But anyways, I'm going back to gold here. And gold is going to be a very interesting pair to look into. Whether you plan on holding a long-term buy, I foresee a long-term buy for gold for the future from this year and up until, I don't know, until the United States probably stops their next recession. So wouldn't be surprised that gold actually breaks 3,000, 4,000, or even 5,000. And I know it sounds kind of ridiculous, but I foresee a huge value for gold, at a new higher high, and to test even higher prices, once it already broke 2,000. So I wouldn't be surprised if it doubles to 4,000 in the next year or two, based on what I'm looking at right now. So something to think about, for what's upcoming for tax season. I know a lot of you guys have been asking, what my full thoughts are, and I'm giving you guys my full thoughts on what I'm seeing right now. And what to always pay attention to is Wall Street, right? I pay attention to Wall Street right here, US 30. I pay attention to S&P 500. I don't really pay attention too much on oil. Obviously, oil is trying to regain itself for the price right now. Obviously, maybe we just might end up just staying around here. S&P 500, US 30, the US dollar index, and gold. those are probably like my 4 top priorities that pairs that I always look at, especially during around this time. Obviously, I don't trade the S&P 500, but I do look at the S&P 500 quite a bit. So, what to expect, for this month and when we actually do start the actual tax season. For this month, you should already understand where the administration is going for President Joe Biden there, and his inauguration is next week. I would highly suggest paying attention to what he's going to do first after his inauguration. If you guys don't remember, Trump did a major sign off on the healthcare issue and also another act that he did right after he did his handshake and got the inauguration, becoming president after Obama took off. So that's another key component to pay attention to right after the inauguration is done for next week. These next 2 weeks, no, the remainder of this month from now until when Joe Biden comes in, is going to be crucial to pay attention to heavily, especially what Democrats are going to be doing. And I'm talking a lot about the political side because they're going to have a major effect on the markets. And I'm talking a lot about the fundamentals versus the technical side, because the fundamentals are going to hit so hard that people are going to be like, well, on the technical side, I see candlesticks, I see these patterns, I see my indicators telling me this. But at the same time, if something were to happen drastically, if we were to go to, if the United States declared World War III, obviously there's going to be a major effect on every single currency, right? The United States is a huge super military force all around the globe. So that's another big factor that we could possibly, hit for this year. Maybe World War III, right? Maybe a new global pandemic or epidemic that might hit for this year. People are talking about the new strain, the new variant for the COVID-19, right? Could be the new COVID 2021. I don't know. Some of the big things that the central banks are hiding, right? Central banks are trying to loophole crypto right now, and also the same fact that they're trying to pass something else too. So pay attention to the central banks. We can only anticipate, the amount of news that are going to come in and affect the markets, but also there are also the unexpected news that are going to drive the markets unexpectedly at any given time. And we could be like, holy crap, what is going on with the markets? It has nothing to do with technical. When people just look at the volume and look at the trading side and they're like, yeah, maybe it's because there's just a bunch of traders getting in. Yeah, it has nothing to do with that. You have to understand that if you are the banks, you're going to try and manipulate and run these prices up and down to get the traders off. Okay, we can only work, as one individual trader, right? Per retail trader that we're doing per broker. So let's see what else. I'm just getting more on the fundamental side because I want you guys to understand that when the markets do impact unexpectedly from any single news event, you have to dive down, where it could be Forex Factory, like I said, FX Street. I like FX Street the most right now. What FX Street has been updating a lot on the latest news. I always refresh this page right here at the homepage right here. I refresh this page almost every 15-20 minutes because you never know. You never know what's going to happen, and when the markets do react to something that's unexpectedly based on news, you have to understand where things are going for the markets for the next session, right? So if we're closing in on New York session right now, because it's 3 o'clock my time, it's 4 p.m. over there in Eastern time. So if New York's closing right now, right, what could we possibly expect for Tokyo, right? And then into London sessions, and then back to a new day, which would be tomorrow, will be Tuesday. So I make sure that I'm on top of my fundamental game than my technical based on around this time frame. And I know there's not a whole lot of traders that talk about the fundamental side, but I want to give you guys my full insight on the fundamental side. If something were to happen on the fundamental side, you have to understand and adapt to the markets when the news hits drastically. It could be, like I said, based on what I'm just repeating myself. It could be based, maybe the new lockdowns for the new pandemic that's coming in. Maybe Joe Biden is gonna maybe the impeachment for Trump. That's a big issue right now too. That's going on right now. Huge political debate right now for the Democrats versus Republicans, right? And maybe interest rates might just drop even drastically, right? They might just go negative rates. It'd be pretty crazy to see a central bank cut rates down and be a negative rate. That'd be pretty insane. But like I said, it has happened before, but it happened a long time ago. Could probably happen again. We're in a very different state of market, and from what I'm seeing so far, from what has happened based on COVID and how COVID has affected the markets last year and up until now, you know, this thing is just going to stay probably for another, I don't know, probably maybe forever, the way things are going. Wouldn't be surprised if they pass the vaccine once a year, like the flu vaccine. And that just drives the pharmaceutical companies and the medical companies even higher in stocks. Those that are investing in stocks, I would highly recommend looking into those companies. And so, political does play a huge role around this time. And like I said, I'm waiting for the first thing is, I'll be honest right now. The first thing I'm waiting on is the inauguration from Biden, doing his transition with Trump. If Trump concedes and actually gives his right to the office. If not, then we already know that he's going to get pulled out anyways, out of the office anyways, regardless if he tries to stay. Okay. And like I said, once Joe Biden becomes president, things are just gonna start slowly changing, but the markets are gonna start slowly adapting to the new president. And I don't want to sound too political on this, with the markets, but like I said, when Democrats come in or when Republican comes in, you have to understand where these markets are going to shift, right? And who's going to have the bigger playing field in the currencies against commodities or even stocks. So that's it, guys. I hope I wasn't talking too much, but like I said, I just wanted to dive into the whole fundamental side, for tax season. I know I didn't talk too much about the fundamental side for last year, but I want you guys to understand that the fundamentals are going to play a huge role every single first quarter of the year during tax season. You just got to understand that when the news hits, it's going to hit hard. And then you have to understand and adapt to the markets when the markets are not going the way you're anticipating, especially if you're fully relying on technical analysis. And so, don't get me wrong, technical analysis is great. You got to have your technical analysis. You got to have your technical analysis approach, right? But also at the same time, always be mindful that the fundamentals and unexpected news will always hit the markets at any given time, and you have to live with it. I'll be honest right now. There are days that news hits, right? And we don't know what to expect. And we just get, a little bit sidetracked or start second guessing because we don't know where the market's going to go because there's so much volatility going on. So pay close attention, guys. Like I said, I just want to, I'm not trying to scare nobody off of tax season, but like I said, tax season is, to me, the most crucial and the most beneficial trading season to make the most amount of money, because it is the most volatile season and the most volatile quarter of the year. And summer's all right. Fall season picks a little bit back up. Other than that, wintertime, there's not a whole lot going on during wintertime. Wintertime sucks. Okay, I'll be honest right now. From October to December is by far the worst months to trade unless it's election year. Okay. Other than that, I don't really care about October, November, and December. That's why I talk a lot about tax season all the way through the beginning of summer. Summer, I like to enjoy my time, and then I pick myself back up in the fall time. So pretty much summer is kind of like my little break. But like I said, that's it, guys. But yeah, I feel like I talked too much, talking about the same thing. But like I said, pay attention to every single key component to the fundamentals that are going to drive the markets for tax season. And pay attention to what's going to happen when Joe Biden comes in and when the Democrats actually bring in everything what they plan on doing for the next 4 years for United States and the economy for the United States. So other than that, that's it, guys. Peace.